You're free. I wish you independence. Freedom from, freedom of, love, and disco, and souvenir. Hope you guys doing fine. Hope you're doing well. I'm not gonna play. Come on. Just give me that second. Don't change the channel, please. Stay. Oh, you guys doing? I hope you're doing fine. No, we're analyzing now. So I'm doing the correlation first, but we're analyzing gold. It's the currency of God, the currency of Zeus, the gods of Olympia, the Zitoalas. Ole, 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 ole. Elas. Oh, enough of that crap. Let's get into it now. How you guys doing? This is the daily for the dollar, the mighty king, dollar, and we can see that it's trendless now. And I have an assumption that we're going through one big A, B, and we might test, according to Elliott, we might go all the way to here, or maybe, right here, 92 maybe. But I think before that, even though Elliott is not always right, that's why when people ask me about technical analysis, I always tell them to do Elliott wave at the last one, because a lot of people, believe in truth. I believe in Elliott too, but I believe in conventional technical analysis. I try to be open-minded. So Elliott is telling me there's another move down. Yet for now, I'm looking at conventional technical analysis. I respect you, almighty Elliott, and I love you, and you made me money in the past. But let me just look at conventional technical analysis now. I just want to get it out of the way. So it's like, okay, if you're Elliottician, you believe in that there's another bottom. And anyway, so based on technical analysis, conventional technical analysis, the price action found support to the price memory right here. You can see that, this low right here. It's amazing how price memory work a lot of times, huh? Okay, so, and also it showed bullish action, and that bullish action did not confirm this is a bullish harami, but it needs confirmation, and it was not confirmed yet. You found buyers at the lower end of the Bollinger Band. Good deal. So there's no doubt about that. So you have both price memory too, and lower end of the Bollinger Band. So you see how crazy it is? It's weird. But what I love the most is you have a low, lower low. Whoa! You have a low, higher low. And it came out of oversold. Yippee! Which tells me, see, that's why you have to be open-minded as a trader, as a technical analyst. So it tells me now the most likely you will go to the 20 period moving average right here. This is the mean reversion trade. So I would give it 70% at least. I'll put my money into it. So most likely you will hit this thing. If Elliott is right, you might go for another low. Even though I love Elliott, as I told you, but I'm going to see the price action later. And if you see every time you have this bullish divergence, the mean reversion happen. You have it here, and the mean reversion happened, and you had another low, and you had that beautiful bullish divergence. So I'm betting for at least a mean reversion, at least, and I'm really convinced that's going to happen. That's how I believe in this behavioral finance. And this is the weekly time frame for the mighty king, the dollar. And there's no bullish development at all, if you think about it. It's just a price memory that really worked in the past. And it found buyers. It's below the 10 period moving average. It's below the 20 period moving average, the 50. So there is no bullishness. It's not screaming bullish. But you could have a low and a higher low, and you could be convinced, like me, that this is like a throwback of inverted head and shoulder, and you could also say this is a conclusion of two, and A, B, C. So there's that still some eliticians like me that believe that we might have another move up very soon. So the bullishness here, price memory, a possible Elliott wave count. This is bearish. And what I love here is that a bullish crossover on the MACD is still in effect, and it's above the zero line. And if you see, a lot of times this thing work. Let's see, it worked in the past right here. So it's above the zero line right here, and a bullish crossover still in effect. So there's still hopes for the dollar. My main hope is the mean reversion right here. All right, so let's talk about the gold, the currency of God. All right. Okay, so this is the cloud study, which is very reliable in the long term because the signals are very rare. It's not always, you don't always find it. So I combined it here with the continuation pattern. It's like a symmetrical triangle. It doesn't fit absolutely the rules because you have empty white space here, as they call it. But still, nevertheless, it could be a symmetrical triangle, and it's a continuation pattern, which means you have a leg down, and you resolve this symmetrical triangle, and you have another leg down, and after that you have a measured move. So what happened here in the daily, you have a one black crawl on Thursday, and you have a quasi hammer, a quasi doji on Friday, yet you closed below that trend line. So this is definitely bearish. So the bearishness here, the cloud, the continuation pattern, you closed below it, and you are almost there in the MACD crossover, which is extremely reliable. And the fast signal of the stochastic that comes before the MACD crossover gave us that possible MACD crossover. Sometimes it happened, but it doesn't work. It kept going up, but it's a bearish development, so you have to put it in consideration. Okay, so this is the volume by price. This is I'm playing with the chart. This is the volume price by price, where it showed its ugly side. It's a lot of trading volume here that showed resistance, as I tweeted before. It came with at that time of the 38% Fib retracement from this high to this low, so it showed resistance. So most likely it's going to take a lot of energy to go over that. So the volume by price telling me you might test this low very soon. Okay, good deal. And this is the daily. This is the weekly time frame. I had a video about it, and I did tweet about it too, how reliable it is to give me an end of a correction. Up move or a correction. In this case, a crossover of the full stochastic and the MACD that took place at when gold was at 1975. So it would have saved you money right here if you follow this rule. So to me, this is the official time of the correction. It started in September, like officially. And after that, you see what happened, and you can see how really good it is. And most of the times in the weekly time frame, when the stochastic goes to this low, except in this time, this time that what happened in the COVID-19, it's really an exception. But most of the times, if you reach that level in the weekly time frame, you will go to oversold. And when you go to oversold, you could run it in your own time. It will take the price action down with it. And most of the times, you come out of oversold with a bullish divergence and a MACD crossover in the past. So this tells me the price retracements is going to continue. I wish you guys the very best. I wish you enjoying life. I wish you keep your mind open all the time. Gold bugs, please be careful. Be careful of your narcissism. Be careful of thinking that you always know the future. Please open up your mind. I love you guys. I love everybody. I love disco. And you know what? Disco is really, really forever!